All right, so we're diving deep into Shilchar Technologies financials today. We're looking at their annual report, what analysts are saying,
Right.
and even some industry trends just to really paint the whole picture.
Yeah, and there's a lot to unpack here.
Absolutely.
But one of the most interesting things that jumps out right away is just Shilchar's growth story.
Yeah, what's going on with that?
I mean, their revenue jumped over 40% last year.
Wow.
Yeah, to 396.88 crore rupees.
Oh, wow.
And their profit is up even more, over 75%,
Seriously.
to 91.89 crore rupees.
Those are some pretty incredible numbers. I mean, 40% revenue growth, that's not just good, that's like stellar.
Yeah.
What's driving that kind of performance?
Well, they've been strategic. They expanded their production capacity, so it seems like they anticipated this demand and planned for it.
Smart.
Yeah. And they also seem to be really good at customizing their products, which allows them to charge a premium.
Okay, so they're not just churning out the same old transformers. They're kind of tailoring solutions.
Exactly.
Yeah, which makes a lot of sense in such a competitive market.
Mm-hmm.
But of course, growth is only part of the story.
Yeah.
We need to look at how effectively they're turning those sales into actual profit.
Right. And that's where these key profitability metrics come into play.
Okay, let's hear it.
So let's start with their EBITDA margin. Last year, it reached almost 30%, 29.96%.
Ooh, that's significant.
Yeah, it's a pretty substantial increase from the previous year.
Okay, now I'm going to need a little refresher here for those of us who aren't, financial statement whizzes. Remind me what that EBITDA margin actually tells us.
Sure. Basically, it's a way to look at the company's operating efficiency. It shows us how much profit they're making before we factor in things like interest, taxes, all that.
Like a pure look at how they're doing.
Exactly. And that near 30% margin, that's a pretty good indicator that they're running a tight ship.
So lean and mean operations.
Yeah.
Okay, so what about return on capital employed, the ROCE?
Right.
And return on equity, ROE?
Yes. Those are important too.
Yeah, I know they're important. I always get them mixed up, though.
Sure. So basically, they tell us how effectively the company is using its capital, both debt and equity, to generate profits. And Shilchar is doing really well on both fronts.
Okay, good. How well?
So in FY24, their ROCE was over 73%, and their ROE came in at 55%.
Wow. Okay, now those are some numbers that would make any investor, sit up and take notice.
Mm-hmm.
They're clearly making their money work hard for them.
Absolutely.
But what about the future? Is this growth sustainable, or are they just, riding a temporary wave?
Yeah, that's the big question.
Right.
Well, to get a sense of that, we need to look at their future guidance. And Shilchar's leadership seems pretty optimistic. They're expecting continued strong demand in the Indian transformer market, especially with the, renewable energy sector booming.
Yeah, that makes sense.
Yeah.
India is investing a lot in renewable energy.
Mm-hmm.
And transformers are, essential for integrating all those sources into the grid.
Mm-hmm.
So they've got some pretty strong tailwinds behind them. But let's talk about the lifeblood of any business, cash flow.
Yes. You can't run a business on promises and good intentions, right? Cash is king.
That's right. So let's unpack Shilchar's cash flow statement. What kind of numbers are we looking at?
Okay, well, in FY24, their free cash flow came in at a very healthy 91 crore rupees.
Okay, free cash flow. That's the money they have left after covering all the essentials.
Right.
Operations, investments. What does a number like that tell us?
Well, it tells us they have options. That free cash flow gives them the flexibility to expand, maybe pay dividends to shareholders, even buy back stock. Or just have a cushion, if there are any economic storms on the horizon.
Like their financial safety net.
Exactly.
And what about cash from operations?
That's another crucial metric.
Yeah.
It tells us whether they're generating enough cash from their regular business activities to cover their expenses. And for Shilchar, it's a resounding yes.
Okay, good.
In FY24, their cash from operations also saw a big jump, reaching 72 crore rupees.
All right, so they're making money, and they're turning that profit into actual cash.
Mm-hmm.
That's a good sign.
It is.
And about their cash reserves. What's their rainy day fund looking like?
They're in a great position. As of March 31st, 2024, their cash reserves had grown to 82 crore rupees.
Wow.
Which is a significant increase from the previous year.
Okay, so that's another indicator of, their financial prudence.
Yeah, absolutely.
Prudence. We like to hear that word when we're talking about investments. It's all about balance.
Right.
Speaking of balance, let's shift gears and talk about debt. Even a profitable company can get into trouble if they have too much debt.
Oh, absolutely. That's why we look at the debt-to-equity ratio. It gives us a picture of the balance between borrowed money and shareholder investment. And here's the thing. Despite their amazing growth, Shilchar currently has zero long-term debt.
Zero debt. Okay, color me impressed. I mean, that's almost unheard of, especially in a capital-intensive industry like transformer manufacturing.
Yeah, it puts them in a really strong position. They're not beholden to lenders. They have more flexibility, and they're less vulnerable to interest rate hikes. It's a huge advantage.
All right, so we've got this picture of a company that's growing rapidly, making healthy profits, generating tons of cash, and they're staying debt-free. It almost sounds too good to be true. Are we missing something here? Are there any red flags that we should be watching out for?
Well, it's always wise to stay critical.
Of course.
One thing that, their PT to cash from operations ratio is solid, so their profit is actually turning into cash. But we should probably look closer at their trade receivables trends. Are they collecting payments from customers on time? Or is there a growing backlog that could signal potential issues?
Right, because a company can look fantastic on paper, but if they can't collect the cash they're owed, that can create some problems. So what's the story with Shilchar's trade receivables?
So their annual report actually breaks this down pretty well. And as of March 31st, 2024, most of their outstanding receivables, we're talking 94 crore rupees, were due in under 6 months.
Okay, so that seems pretty reasonable. I mean, most businesses don't operate on, cash on delivery terms. What are the receivables that are older than 6 months? Those always make me nervous.
Yeah, you're right to be cautious about those. Shilchar does have some older outstanding receivables, but they're relatively small, compared to their total receivable.
Okay.
It's definitely something we want to keep an eye on.
Yeah.
But it's not necessarily a huge red flag at this point.
Okay, so let's file that under monitor, but don't panic.
Right.
Now let's talk about their, efficiency metrics.
Mm.
We touched on realizations earlier, and you mentioned they've been trending upwards.
Yeah. They're basically fetching better prices for their products.
Okay.
Which tells me they're not just competing on price.
Right.
They're offering something unique.
It's that customization we were talking about.
Exactly.
And the market's willing to pay a premium for it.
Mm-hmm.
It's like that saying, price is what you pay, value is what you get.
Yeah.
They're creating value.
Absolutely.
But how efficiently are they using their assets to generate those sales?
That's where asset turnovers come in. Essentially, this metric tells us how well they're using their assets to generate revenue.
Got it.
So, for every rupee invested in things like property, plant, and equipment, how much revenue are they generating?
Okay, so a higher asset turnover means they're running, a lean, efficient operation.
Exactly.
Kind of like how a busy restaurant wants to turn over tables quickly to maximize their revenue.
That's a great analogy.
Okay, cool. So we'll need to, look at the specifics of Shilchar's asset turnover ratios, but it's a key metric to keep in mind.
Definitely.
When we're assessing their overall efficiency and agility.
Yeah. Agility is important, especially in a fast-moving industry like renewable energy.
Exactly.
Yeah.
Okay, so we've got efficient operations, strong pricing power. It all points back to healthy profitability. But what about those third-party transactions? The deals and relationships they have with other companies. Those can be real game changers sometimes.
You're absolutely right. Those relationships can open up new markets, create synergies.
Yeah.
But they can also introduce, dependencies and risks.
Yeah, it's a bit of a dance, isn't it? Finding the right partners, moving in sync can lead to, beautiful results, but one wrong step and...
Yeah, you can really throw things off.
Yeah, exactly.
Mm.
So where does Shilchar stand in this dance?
Well, their annual report highlights a pretty interesting detail. They have a significant relationship with another player in the transformer industry, Nile Transformers Limited.
Wait, Nile Transformers? That name rings a bell. Weren't they mentioned in the context of those trade receivables we were just talking about?
Yes. As of March 31st, 2024, Shilchar was owed 12.38 crore rupees from Nile Transformers.
Oh, okay, so it's not just a casual handshake.
Right.
There's some real money involved here.
Yeah.
But is this a cause for concern, or is it a sign of, a strategic partnership?
That's the million rupee question.
It is.
We need to dig deeper to understand the nature of this relationship.
Right.
Are they primarily a customer, a supplier, a joint venture partner?
Mm-hmm.
The answer will tell us more about, the potential impact on Shilchar's financial health.
Okay. So we've added another item to our, detectives to-do list.
Right.
We've been pretty focused on the numbers.
Mm.
But let's not forget, the human side of this equation. What about Shilchar's employees? How are they treated? What's the company culture like?
That's a great point. You can learn a lot about a company's values and long-term sustainability by looking at how they treat their employees.
Yeah.
And from what I've gathered, Shilchar seems to have a strong focus on employee well-being. They talk a lot about creating a supportive and empowering work environment.
Okay. Well, that's encouraging.
Yeah.
I mean, happy employees tend to be more productive and engaged, which benefits everyone in the end. What kind of specific benefits do they offer?
Well, they provide, health insurance, accident insurance,
Okay.
maternity and paternity benefits.
Nice.
They even have on-site daycare facilities.
Wow. They really thought of everything.
Yeah.
It sounds like they're going above and beyond to create like a family-friendly workplace.
Yeah, they also mentioned that their facilities are accessible to employees and visitors with disabilities.
I love that.
Yeah.
It's refreshing to see a company that really prioritizes its employees and fosters an inclusive environment.
Definitely.
It's not just about profits.
It's about people.
Yeah, it's about people. And this focus on human capital is likely a major contributor to their overall success.
Absolutely.
It's a good reminder that investing in your employees is just as important as investing in, equipment and infrastructure. Okay, so we've covered a lot of ground. We've explored Shilchar's financial strength, their impressive growth, efficient operations, even their commitment to their employees. But there's one big question looming. What's this company actually worth? How do we put a price tag on all this potential?
The age-old question of valuation.
Right.
It's both an art and a science, really.
It is.
We have to factor in their financial performance, of course, but also their growth prospects, the competitive landscape, even the overall market sentiment.
So many variables.
Yeah, it can feel overwhelming.
It's like trying to appraise a rare antique or something. You need an expert eye to really assess its true value. So where do we even begin?
That's where those valuation ratios we talked about earlier come in handy, like the PE ratio that compares the stock price to earnings per share.
Yes, that one's stuck in my head. So a high PE ratio usually means investors are pretty optimistic about the company's future.
Right. They're willing to pay a premium for that potential.
Exactly.
But we can't stop there. We also need to look at the PEG ratio, which factors in the company's expected earnings growth.
Right. So the PEG ratio helps us see if that optimism is justified by the company's growth trajectory.
Exactly.
Remind me, what's considered a healthy PEG ratio again?
Generally, a PEG ratio below 1 could suggest the stock is undervalued,
Okay.
while a ratio above 1 might indicate it's overvalued. But of course, it's not always that simple. You have to look at the bigger picture.
Right. We need to find that sweet spot.
Yeah.
Where the PE ratio is supported by, realistic growth expectations. So where does Shilchar fall on this valuation spectrum?
Well, to answer that, we need to pull up their latest stock price and see what the analysts are projecting for their future earnings.
Right. Let's crunch those numbers. But before we get lost in a sea of, valuation metrics, I think it's time to take a step back and reflect on what we've learned so far. What are your initial impressions of Shilchar Technologies? What jumps out at you?
Well, honestly, they seem like a real powerhouse.
Yeah.
I mean, their growth is phenomenal. Financials are rock solid.
Right.
And they're clearly in a sweet spot in their industry.
Yeah.
But I'm also a little wary, about those close ties with now Transformers.
Yeah, that's a good point. It's easy to get caught up in all the positives.
It is.
But we do need to look at those potential risks, too.
For sure. Speaking of potential risks, let's circle back to those trade receivables. I know we touched on them earlier, but I'd love to dig a little deeper. Is there anything specific in the report that we should be paying attention to?
Absolutely. The annual report actually breaks their trade receivables down by age,
Okay.
which gives us a more detailed look at their collection practices. And as we mentioned, a large chunk of their receivables, over 94 crore rupees, are due within 6 months, which is fairly standard.
Right.
But it's those older receivables that, we want to scrutinize a bit more.
Right, because the longer an invoice goes unpaid, the higher the risk that it might never get paid at all.
Exactly.
What's the story with Shilchar's older receivables? Well, they do have some receivables that are older than 6 months.
Okay.
But the good news is that those amounts are relatively small compared to their total outstanding receivables. So, it's definitely something to monitor, but it's not raising any major red flags for me at this point.
Okay, so we'll keep that on our watch list. Now let's dive back into this, intriguing case of Nile Transformers. We know they're both a customer and a supplier to Shilchar, which creates, a somewhat tangled web. What kind of risks does this kind of intertwined relationship pose?
Yeah, the biggest concern there is dependency. If Shilchar relies too heavily on Nile transformers for either sales or supplies, it could make them vulnerable.
Right?
If Nile transformers were to suddenly run into financial trouble or even just decide to end the relationship,
Yeah.
that could really impact Shilchar's revenue or their ability to get essential components.
Right. It's like putting all your eggs in one basket. Diversification is key, especially in business. So what can we glean from the information that we have about this relationship?
Well, Shilchar's annual report does emphasize that all their transactions with related parties, including Nile transformers, were conducted at arm's length,
Okay.
and in the ordinary course of business. So that suggests they're trying to maintain a professional, transparent relationship.
Okay. Well, that's reassuring, but I still think it's something investors should keep a close eye on
Yeah,
because relationships can change, and we need to understand how those shifts could potentially impact Shilchar's future.
absolutely.
Okay, we've covered a lot of ground: growth, profitability, cash flow, even employee well-being. But let's tackle the big one: valuation. How do we actually determine what Shilchar is worth?
Yeah, valuation, this is where all those pieces we've talked about come together.
Right.
We've got to look at their earnings, their growth potential, the industry, market sentiment, and try to arrive at a reasonable estimate.
That's a lot. Sounds like more of an art than a science to me.
It kind of is.
But, we have some tools to guide us,
We do.
like those valuation ratios we talked about.
Yeah.
The PE ratio.
Exactly. So let's start with that. Shilchar's current PE ratio is, and we'll need to look this up,
Okay.
but we'll get that number for you.
Okay, so that's going to tell us how much investors are currently willing to pay for, every rupee of Shilchar's earnings. Is that considered high or low for their industry?
Right. Well, to really get a sense of that, we have to compare it to their industry peers, historical averages, all that. A high PE ratio doesn't necessarily mean the stock is overvalued, though.
Okay.
It could just mean investors are confident in their future growth.
Right. It's all relative.
Mm-hmm.
But we need to make sure that optimism is, grounded in reality.
Exactly.
And that's where the PEG ratio comes in.
Right. The PEG ratio adds in the expected earnings growth rate,
Okay.
and we'll also get that number for you.
Okay, and a PEG ratio below 1 could suggest, undervaluation. Does that mean Shilchar's a screaming buy?
Well, not so fast. While these ratios are really helpful, we can't rely on them alone. We also have to think about, qualitative factors, like the competitive landscape, technological advancements, even regulations.
Yeah, it's all about connecting the dots,
Mm.
seeing the full picture.
Mhm.
So after all of this deep diving, what's your verdict on Shilchar Technologies?
Well, I think they're a really interesting company with a lot going for them.
Mm-hmm.
Strong financials, impressive growth, and their commitment to their employees is great to see.
It is.
But like with any investment, there are potential risks to consider,
Absolutely.
like their relationship with Nile transformers.
For sure. Well, this deep dive has given us a really solid understanding of Shilchar Technologies.
It has.
But it's just the beginning, right? Investors need to do their own research, weigh the potential rewards against those risks, and decide if this company aligns with their investment goals.
Couldn't have said it better myself.
All right, so to wrap things up, remember, knowledge is power, and you're now armed with a wealth of information about Shilchar Technologies. This deep dive has hopefully equipped you with everything you need to continue your exploration, so happy researching.